Usually, okay, so full transparency, recording has actually just now started. So if you've been here listening, welcome. Recording. And hopefully it doesn't mess up a bunch of stuff.
The price is bouncing more than a basketball.
Yeah, ooh, there's the initial push. Is that a push up for liquidity so that we can dunk this mug, or are we actually going to try to break out of this bull flag like?
They cut rates 25 basis points.
Okay, I kind of figured. And we went right back down into the flag. Yeah, nothing super special. I mean, like if I were to try to do anything, I'm seeing like we're holding a buck above this level, we're holding back above this level, and it looks like we've got plenty of upside on the field. If you're trying to trade news, be careful if you're trying to make a trade within that 1 or 2 minutes after news has been released, because they can, depending on what prop firm you're on, they can deny you payment for trading news when you're not supposed to, even though they let you. Especially Top Step hates it when you play news. I think Take Profit's one of those as well. They don't like it when you play news. Oh, yeah.
And Alpha.
And Alpha's not a fan of that either.
No.
Yeah, best honestly, just unless you're just trying to pass an eval, best just to stay away from news candles anyway, to be quite honest with you. I mean, like the only good thing that news candles can give you is a really good lesson, or maybe just trying to pass an eval, basically. There we go. Right back down underneath, trying to push back down. Nice big support right there underneath it. Just trying to decide how we want to do this. Pretty gross. I'm really surprised that we're not just absolutely just dumping. I really thought that we would be. Here's the crazy part. This is really not that unrealistic of a move. I know it's a 74-point candle, but like it's not awful. It's really not the wild ride.
Underwhelming.
Yeah, it's that's a good way to put it. Underwhelming. To be fair, though, I guess if you were going like full port in a 50K, you'd only need like 15 points to pass or fail. So, but you can see, like with a 74-point candle, you can get the move in both directions, and you could 100% just blow accounts. So, yeah, now we wait 1 minute till the first 5-minute candle done. Duck said he was going to try to come back, so I think that'd be fun. All right, let's see if this thing will keep dumping through this, or if the support is just going to be a beast. There we go. Still holding strong. Goodness. Ugh. All right. All right, so we did break and retest back underneath this right here. Do we keep climbing back up, or do we finally get that push down that I think everybody's really at this point kind of expecting? We got about 24 minutes until Powell starts to speak. This may decide to just kind of find the range until he says something. Lots and lots of support down there still. Wow. Big candles, big candles. 74 points that last one. This current candle is about 41 points, averaged about 17. So you can see the diddle. Swinging back and forth here. Yeah, I mean, everything I see says we're holding above that support level right now. So and back into the mess. There we go. Well, let's see. This is what I'm going to do. I was going to see if someone could share their screen just because I am recording. Usually, look at that push back up in there, baby. Dang. Because I'm recording, streaming a YouTube video usually puts a bit of a strain on my computer. Do I have anybody? I was going to get Duck to do it. Let's see if I can just pull it up.
What do you need shared?
I was going to see if we could get a live of the of what's his face talking at 2:30.
Rome?
Powell.
Pull that up.
Should be pretty easy to find. Let's see. I'm trying to remember what site I usually use. Google. Live Powell speech. There we go. On YouTube. Yeah. CNBC television, YouTube channel, their YouTube channel. Federal Reserve Chair Powell speaks. That, or there's another website that sometimes kind of does it. 20 minutes till he takes the stage. Oh, beautiful. All right.
Works?
Yes. Make sure. You want to make sure you're. Oh, there it goes. I can hear it. Yep, I can hear it. If you click on. You don't have to unstream me, but if you click on Bitcoin Golfer's video, and then if you want to come back and watch my chart, you can do that too. But that way, at least you'll get the sound of it. You may want to wait because it is playing some background music.
Elevator music.
Nice rejection right here. Back underneath this, we did like swing back up into it, close and open the candle back down here underneath it. Again, I'm not playing anything right now. I'm just kind of watching. Because it is messy. Such inspiring music. Yeah, what a crap show. Just swings both ways right now. Wicks. Let's go look at that 1 minute candle, see if we can see anything.
It was like the Fed is going to end the quantitative tightening on December 1st.
They're gonna stop what? I'm sorry.
Tightening.
No.
The tightening?
So they're gonna start burn. Yeah. I don't even know how to say it. Quantitative tightening.
Oh, for the Fed? The Fed?
Yeah.
I got you.
Money printers go burr.
Somebody's here. What's Duck doing? Mm-hmm.
They're going live about the
Dang right. Dang right we are. Yeah. Okay, well, it looks like we are at least finding some semblance of support right around in this area right here. We haven't really broken, I mean, like, honestly, at this point, in order for us to really kind of have any sign of continuation, we need to get back over the top of this. This is kind of the ceiling we built for ourselves, and we've had the floor kind of built in since this morning. We haven't really been able to claim. It is trying to kind of creep back down underneath it. But every time we get back down there, I mean, like, the buyers really just kind of eat that back up right there. So, I think it wants to try to do something. But until we know what, it's going to be really hard to take advantage of that. So, yeah, I hate going short right here, and that's right here at this level. We've just got a bunch of crap underneath it. I really just want to see this kind of something get demolished here. That would be ideal. $15 minutes till Powell takes the stage. And we've got this recent support right back down here at 204. Even if we do break back down below, that's basically a double bottom back down there. So let's see how we react to that. Yay. Two-minute ATR is sitting at about 24 points right now. 5 minutes sitting at about 25 points, so not much difference between the two of those. Pretty wild, actually. Typically, the 5 minute is a good bit bigger than the 2 minute. All right, and I don't know if they consider Powell's speech to be like the news event. Should be, if once he gets up and speaking, and give him a minute, for sure you should be out of that, that deal with again, 25 basis points. Like, even though like it's welcome, I don't think it's the news that everybody was just like, oh yeah, that was so great, thanks, that's awesome. It just isn't. So I'm gonna turn my light on. Man, why is it so dark? Nice push back up into this absolute spider web of trash. All right, so nice little double bottom here / double bottom here / W formation, pushing back up to the top of this trend line we've got going on right here. I'm going to pull this back out of the way because that's a little annoying. Try to keep it as clean as I possibly can. This candles are already as messier than, messy enough on their own. Nice little stop right there, just like a punch in the gut right there. I would like for it to kind of push back over and hold here, and then maybe push back up to there. It could be a potential play that I'd be willing to take, depending on like what the candle looked like when it got back down to it. There it goes. All right, hold tight. There's Duck.
What
Duck! Duck! Dang, we just pushed right through that little level right there. Yeah. I'm not in a hurry. Not in a hurry to take any trades right now. It just looks like some hot trash right now.
So what happened?
They cut it 25 basis points. Pretty
exactly like we thought. Okay.
Yep. Nothing new. Which is why we're getting what we got. Everything's expected.
Yeah, I fell asleep, so. Oh gosh, look at that fucking wick. Holy shit.
Yeah. Yeah, it's so funny because
that was when the announcement came out. Huh?
Oh yeah, that's that nasty. A nasty push back up. I thought you meant the wick that was happening right now. I was
That's a
like,
big wick.
Yeah. Big wick energy, as Machete would say.
Mm-hmm.
Yeah, it's pretty gross.
Oh shit! You sent me a message.
Yeah, I did.
Oops.
No, it's all good. I kind of figured you'd be here when you got here.
Yeah. Funny thing is, I looked at the time about 1 o'clock, and I'm like, no,
Oh, I've got
you
time.
know, I gotta go. I got time. I'm just gonna kick back for a minute.
Right. Well, I went. I mean, I cooked some Tostitos, and I sat and watched an episode and ate some lunch, and then I was like, okay, 1:50, time to go hop on.
Oh shit! My wife's been texting me too.
Oh, dang it, man.
Oopsie.
Hard man to reach.
Apparently.
I mean, I'm not too worried about this swing underneath this trend line right here. You know, it looks to me like the real culprit right here is going to be the support level, because we keep swinging back underneath this trend line right here, and it doesn't seem to be doing anything. I mean, those news candles are like, what trend line? Probably, honestly, just go ahead and take it off. Sorry if that was loud.
It really wasn't
Okay.
all that bad.
Yeah, I covered my mouth, so I was hoping it wouldn't. 7 minutes till the man speaks.
Dude, I let you into my office and you freaking do that? That ain't right.
What do you do? Poot?
Crop dust? Oh,
Crap.
no. That would not be that mellow. You wouldn't have to ask.
This is when any of my dogs walk in, lay under my desk, and then fart, man. Oh, it's disgusting. This chill elevator music's gonna put me to sleep before we get there.
I don't even hear it.
It's on Bitcoin stream. I asked him to stream the meeting, so my computer wouldn't blow up.
And I could put on Michael Saylor for the next 6 minutes talking about Bitcoin.
Good.
Can't believe Warren Buffett's retiring. That's so crazy.
Whoa. I mean, he's only like 80 million years old.
What do you mean by retiring? Doesn't he just like buy shit and it goes up?
He's actually 94, but
Holy crap.
he's CEO of Berkshire Hathaway.
I was about to say.
And so he announced in May that at the end of his term in December will be his December 31st will be his last day.
Wild stuff, man.
Greg Abel will be taking his place.
Interesting.
And he is the vice chairman of non-insurance operations.
That sounds boring. Ugh. Excuse me.
He will remain chairman of the board.
That makes sense, though. Why wouldn't you want the man who's made the company that much money to have a say in what the company's doing next?
Right. But he basically said his age is just...
Oh, I bet.
Basically, he's losing a step, is what he's saying. It's like, dude, you're 90-something years old. The stress of managing that much money, like...
Right. Right. I mean, so what we do on a daily basis is already, 3 minutes. It's already stressful enough. I think, if I had to guess right now, I think it wants to dump. But somebody's holding it right here. But it could be somebody spoofing the market going, hey, yeah, we're holding. Well, if we get back down underneath here again for a third time today, or fourth time, I should say, I think everybody's going to go, oh, what the crap? What the heck? And, I mean, we've just been pump. But again, until we can break that low and really close underneath it and give it a good go, like, what do you do? I haven't really paid attention to it yet, but that money flow oscillator is actually pointing up right now, but we're underneath the 20 SMA, so.
Is that the one that,
Is
that the one that you made, Phil, or is that the one from Simple Matrix?
That's no. That's the one on Tradeovate that Duck uses.
Oh, okay. Gotcha.
See how it's going down now?
Yeah, it just flipped. Oh. Or shrinking at least. I'm assuming you're still using it on the 2 minute?
Mm-hmm. I got all my shorts lined up.
Oh, yeah? I'm definitely paying attention to that 203 level. 203.5. If we get back down underneath there, that's going to be pretty interesting. One minute. Should be taking the podium here any second now. Wow, that's pushing up. What levels are you looking at for shorts, if you don't mind me asking?
Hold on.
Yep. Here he comes.
I lost my screen here.
Oh, no. Okay. Podium's still empty. So.
All right, there we go. I have... Oh, here he comes.
Yep, he's coming now.
240... Damn it. 220. 214.
Good afternoon.
207.
My colleagues and I remain squarely
200.
focused on achieving our dual mandate goals of maximum employment and stable
Dual
prices
mandate.
for the benefit of the American people.
Take a shot.
Important federal government
I already got it right. I got it right here, dude. I got my bourbon.
have remained available.
For real?
suggest That the outlook for employment
For real.
and inflation
I'm telling you, bro.
If I didn't have to drive somewhere this afternoon, I would. I'd join you.
Conditions in the
The,
labor
the
market
haven't had
benefit
any-
of working for yourself, bro.
and
That's
inflation
true.
remain
I haven't had
somewhat
any Eagle
elevated.
Rare in a long time.
In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by a quarter
Yes,
percentage point.
we know.
We
Congratulations.
Thanks for the
also decided
update.
to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments.
Look how many Macs are in that room.
Suggested economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data
You think tariffs have anything to do with that?
shutdown show that growth in economic
100%.
activity may be on a somewhat firmer trajectory than
Here we
expected,
go. Here we go.
primarily reflecting strong consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significally since
Wow.
earlier in the year. A good part of the
Might be
slowing
the
likely
longest it's
reflects a
waited.
decline in the growth of the labor force due to
It's
lower
pushing up.
immigration and labor force participation, though labor demand has clearly
Is that a
softened
push or
as
is
well.
that liquidity?
Although
I think that's
official
liquidity,
employment
brother.
figures for September are delayed
Because it's weak.
available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that
We could have told you that.
in energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast,
All right, here's the
I think
cap.
those guys.
appears to be continuing.
Might
You think those people are trading?
Inflation expectations
Yeah.
Probably.
over the course of this year on news about tariffs,
It's funny.
as reflected in
There's we
reporting
just
and
pushed through that
survey-based
cap for that
measures.
that previous range we
Beyond
were
the next
stuck
year
in.
or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
I know it's barking at you. I hear it.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices
Drink.
for the American people.
No, I got it right here, bro.
We decided to lower the target range for the federal funds rate by a quarter percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods,
Yes,
resulting
we
in
are.
higher overall inflation. A reasonable base case is that the effects
You want a drink? Is that the problem?
short-lived, a one-time shift in the price level.
Did we just break and
It is also
retest on top
possible
of
that
that
the
level?
inflationary effects
Pretty
could instead
much.
be more persistent, and that is a risk to be assessed.
I don't know
and
what to
managed.
expect right now,
Our
bro.
obligation
That's
is to
a little bit
ensure
of a
that a
disappointment.
one-time increase in the price level does not become an
I
ongoing
think we're gonna
inflation
punch
problem.
through though. We're gonna die.
In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside.
Oh,
A
oh.
challenging situation. There is no risk-free path for policy as we navigate
Up.
this tension between our employment and inflation goals. Our
I have
framework
a
calls
I
for
have
us to
shorts
take a
at
balanced
254.
approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months,
Up.
And I'm
upside
in.
risks has shifted. Accordingly, we judged it
There's
appropriate at this
second
moment to
level.
take another step toward a more
There's the next level. There's the next. Holy
With
crap.
today's decision.
Holy
to respond in a
moly.
timely
All
way
right.
to potential
Yes,
economic
sir.
We will continue to
think I
determine
just
the appropriate
broke
stance of monetary
fucking
policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions last meeting, there were strongly differing views about how to
That's
proceed
fun.
in December.
Straight. It's the P&L
Reduction
at
in the
E.
policy rate at the December
Oh,
meeting
yeah.
is
E, what the
not
crap?
a foregone conclusion. Far from it.
That means
not on a preset course.
that means you could just buy Apex.
Today's
You're
committee
CEO
also
now,
decided
Doc.
to
Yeah, they were like,
our aggregate securities holdings as of December 1.
He just went.
Our long-standing
That's
plan has been to stop
freaking
balance sheet runoff when
hilarious.
reserves are somewhat above the level we judge consistent with ample reserve conditions.
Beautiful.
All right, I'm
Signs have clearly emerged.
I'm
that
out
we
of
have
it.
reached that stage.
Huh?
In money
I
markets,
had,
rates have moved up to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility.
That was a break and retest of that level I pulled
God,
out earlier.
let's
There we
see
go.
here.
Dumping more. Dumping
Has
more.
begun to move up relative to the rate
Watch
of
out
interest on
for it.
reserve
Watch out for the
balances.
rebound if it
These
decides to
developments are what
slingshot
we
up.
expected
But
to
like
see
we've broken
as the size of our balance sheet
retest that
declined
freaking level right there.
and warrant today's decision to
There it
cease
goes.
runoff.
It's swinging back up now.
Over the 3.5 years that
getting-
we've
it's
been
getting-
making our balance
choosing
sheet,
contract-
securities
I'm
holdings have
sorry.
declined by $2.2 trillion.
Oh, that's right. You had 20
Nominal
freaking
GDP,
Apex accounts.
Our balance sheet has fallen
I had
from
20
35%
PAs
to
gone.
about 21%.
Yeah.
In December, we'll enter the next phase of our
25
normalization plan,
contracts
holding
per
the size of our
PA.
balance sheet steady for a time.
It's about
Our
500,
reserve balances continue to move gradually
500
lower
altogether.
as other non-reserve liabilities
500 altogether.
keep growing.
100 and
Agency securities to run off our balance sheet, and we'll reinvest the proceeds from those securities in
110 points.
furthering progress toward a
Yeah.
portfolio consisting primarily of
So that's 400 and
This reinvestment strategy will also help move
Son
the
of a
weighted average
gun.
maturity of our portfolio
That's nuts.
closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the
There it
composition
goes.
of our balance sheet.
Come on.
The Fed has been assigned two goals for monetary policy: maximum employment
Oh,
and
son
stable
of a gun. I didn't mean to hit that.
prices.
Oh, it's grabbing stuff.
We
man.
remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions
Keep
affect
going.
communities,
I've got
families,
some.
and
I've
businesses
got some
across
still
the
left
country.
in. I've got my
Everything
stop
we do
loss
is
to
in
back up
service
at
to our public
180. So if
mission.
it slingshots
We at the
back
Fed
up.
will do everything we can to achieve
But I'm
our
just
maximum
gonna. I'll
employment
ride
and price
this a
stability
little
goals.
bit down.
Thank you.
See if
I look
we
forward
go.
to your questions.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the
There it
outlook
goes.
and the balance of risks. And
They said, "Oh no, we might not get a
So
rate
that-
cut," and then it dropped another 18 points.
Framed, last month, and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in
What
the
can we go
outlook?
to next?
Or could this unfold along the lines of last year, where you made a sequence of adjustments and
We got
waited
this
to
big
gather more
honking
information?
area back
So
down here
the
that
way
we were
we
messing with yesterday.
I've been thinking about it is the risks to the two goals. For a very long time, the
It's
risk
like
was
a break
clearly
and
of higher
retest of this
inflation.
right here.
And then that has changed now.
Come on.
And as we saw particularly after the July meeting, we saw the downward revisions in job creation. We saw a
Can we
very
add
different
to this
picture of the labor
position?
market and suggested that there were higher downside risks to the labor market than we had thought. And that suggested
we
that
can.
the
There we
policy which we
go.
had been holding at a, I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because
Murray,
one of them
really?
is calling for you to hike and one of them is calling for you to cut.
Nice.
So if that got back into balance, then you'd want to be roughly at neutral.
Hold
So
it.
in that
Come
sense,
on.
it was a risk
You
management.
bears.
And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
You fuddy-duddies. Come on, let's go. Push it down a little further.
Claire
Nope.
Jones, Financial Times.
And Yes,
Thank you
maybe.
for taking this question.
There you go.
we-
Come on.
We've just
Hey,
heard
come on,
from
come
you
on, come on,
that,
come on.
the discussion in December and the conclusion of the discussion is not a foregone
There it is.
conclusion. I'd like to just dig into
There it
that a little
is.
bit more about what sort of arguments were brought up. Was there any consideration, for instance, of
Let's go.
the investment
Hit that
we're
bottom
seeing
and
in
I'll get out.
AI and some of the generation of household wealth through
Actually,
rising
I'll just go ahead and move my stop
stock
loss down to
prices
like.
related to the AI.
Ah,
boom?
never mind. I'll just.
Thank you.
You know,
Let's
I
go move
wouldn't
it down
say
to
that's
86.
That's a factor in everyone's assessment of the economy. I wouldn't
this
say
swing
I was
is
in that
hard.
play for less than 2
I don't
minutes.
think for anybody.
Damn.
Dang.
You know,
All right.
I guess I would say it this way. Once again, I would just point out that we have.
All right, my
a
stop loss is
situation
now
where
at 86.
The risks are to the upside for inflation and to the downside for employment.
If
That's a
it's
good
swinging,
place, Hart.
One
yeah,
tool,
if it's
you
swinging
can't do
hard,
both of
so
those.
like,
You can't address both.
I don't want to be in it. If it
Because at once you've got
slingshots
a very
back up, I
different
want to be
situation.
in the
So
money.
You have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other,
Cool.
and they also have different levels of risk aversion.
All right, I'm
And,
out.
You know, some will be more averse to inflation overruns, and some will be more averse to.
I'm out. If we can't get
underruns of
back,
employment.
I'm below
and so
48
you put that
and a
together,
quarter.
and as you can see from the S&P
I
and
may
from
try
the
to
public discussion that
retake
goes
some of
on
that.
between the meetings when more participants go out and talk, they're very disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, you know, that we haven't made a decision about December. You know, I always say that. It's a fact that we don't make
what do you
decisions
say?
in advance. But this is,
Oh,
I'm saying
yeah.
something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the
Actually, if I'd have been looking at
the
it,
fund
I guess maybe
impressions
I'd have
we've
had it
seen
at
in money
190.
markets are
I'd probably been
related to
safer
the U.S.
there. That's
Treasury
fine.
issuing more short-term
It's fine.
debt?
Everything's fine.
You know, that could be one of the factors, but the reality is we've seen, you know, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, you know, what the place we're trying
Wow.
to reach. What we
It would
said
not have been safe.
for a long time now is that when we feel like we're a little bit or a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant
Right.
tightening, and I think a clear assessment that we're at that place. The other thing is, you know, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars because, you know, again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, you know, there was support on the committee as we thought
Down
about it to go ahead
again.
with this and announce effective December 1 that we will be, you know,
All right.
freezing the size of the balance sheet. And
It is
the
now
December 1 date
2:44. I'm
gives
going
the markets a little
to
bit of time
close
to
that
adapt.
stream.
Colby.
Stop watching. Sorry, I meant to. So I'm sorry. I'll leave my stream up. I didn't mean to close mine. I was trying to stop. You guys feel free to kind of hang out here. I've got to go pick my kid up from school, so he doesn't think that I forgot him. If we lose that level, next big level we have that I have on my chart is back down here. This one was a little bit of like a double up. Yesterday morning, we really struggled with that level. We kept eating back down into this one, even though like most of the buyers were really trying to hold it above that this one right here. But it was a resistance level that turned into support, but it also had support just above it too. So there's a little bit of a weird conundrum there. So I'd be careful when if it comes back down this way. Oh, I'm about to sneeze. If we keep pushing, if we keep dumping, those are the next two levels I'd look for. I'll leave this kind of backed up a little bit. Let's go about like one more. Let's go find like this looks like it'd probably be the next big area to look for right here. I'll just pull a new box out on that one. That's going to be pretty substantial if we can get back through all these little levels right here, obviously. So I'll leave this up. You guys feel free to kind of watch my chart if you want to. If you've got your own chart, you're probably looking at that. But, I'll just leave the streaming. I'm going to mute myself. I'm going to cut the recording here. And I will get this up and going. And so you can go back and rewatch this and listen to it if you'd like. Or, if somebody, obviously, if they missed it. So we'll be back. Tomorrow's Thursday. Yep, I'll be back on tomorrow morning. As long as I'm not sick.